Welcome to Markets Now. I'm Michelle Rourke with Scott Barlick with Klima Barlick, and mostly green on the board this morning with the exception of feeders and some of those deferred live cattle contracts. And, I know we're trying to maybe consolidate a little bit here in the live cattle today after a down day yesterday, Scott. And I don't know if we have all the answers about why we were even down yesterday, do we?
Yeah, thanks for having me, and you're spot on. You kind of wonder why we have to have those days where we take a good week to put some strength on, and looks like you're breaking out through some halfway retracement numbers and through a little bit of a sideways range, only to be followed by a key reversal lower, and everybody calling, wondering why, and there just isn't that reason hanging out there. It's just kind of erratically trading around in this range. And so we're getting a little recovery today, and I think that's warranted, as really nothing's changed yet. Part of my thought is this cash market. Everybody's thinking, hey, we're sitting on July 19th. This is usually when the market's kind of starting to carve out a low. We get to everybody's county fair, and that's usually the spot that your demand has gotten a little sluggish. We're behind the peak. But cash hangs on strong. I think that was impressive when the South, started at 187, jumped it to 188. That was a good sign. And then
essentially steady, right?
Yeah, so fully steady there. The North is more like I got a lot of 196 bids this morning floating around. There's been a few takers, and rightfully so. Cattle really work at this level. So there has been some 198 to some regionals. And one major maybe dangling around on some high quality cattle there. So still good action there. I think the market's feeling good about the cash live cattle here, that it held on yet again for another week.
Right. And we're kind of bucking the trend a little bit here in terms of the seasonals. They normally turn lower at this point, don't they?
Yeah, they do. And it's, August futures have been waiting for this cash to break. And down here in the low 180s, I don't know if cash is going to be able to break that fast. It's we've still got this large positive basis. You got cattle that work, and you've got this basis situation. I would think you'd be an active seller, if you were, had some fats that are ready, and guys trying to sort a little early, trying to pull them in, and then that contradicts the weights. We're seeing some break in the weights here and there, but yesterday you get carcass weights up again, and you just kind of scratch your head and wonder how that's possible. But I think that could be a packer just kind of managing this kill pretty well. It seems like we just are rolling, which a couple of days rest on a packer here, an issue there. Any issue that they have, I think they're excited to maybe, I don't know if I use the word excited, but they're willing to, hey, try to push some of these cattle back. And the thoughts this morning were, okay, some computer issues. Is that going to slow some down? Yeah. There was some calls of warning that it possibly might happen, but I think we're good. Cattle are loading right now to go to those plants that we're calling with those warnings. So I think that's kind of crisis averted for me.
What's your thought, though, Scott, about, we've talked ad nauseum about this discount that the futures are holding to the cash. So what's your sense? I mean, like you said, we're pricing in that the cash is going to fall, but is that how it's going to really happen? Or are they going to meet in the middle or something like that?
I could sign on for a meet in the middle. That sounds like an easy answer for it, but I think that cash is king. It has the ability to stay on longer. We know how tight the supply is, and I think it's going to be tighter. It's going to stay that way as we go through the year, and that's expected. So that's going to be what we're going to fall back on. I do think that this basis can stay strong for the foreseeable future, and that the North should be able to stay premium. These cash negotiators have leverage, which is been rare over the last several years, and they're using it. So, we're looking at cash feeder prices as well. There's still some optimism there. We've got a big Northern video next week. That'll be interesting to watch to see if we're going to keep that optimism going. How high are these guys going to be able to bid? Because some of these break evens that you're buying on cattle, $196 to $2, just kind of that's hard to look at when you got a board. I don't have a board price above 190 with these futures, but yeah, the far out futures are wondering, okay, how many of these heifers are we retaining? And I think we're still at these high levels, and I think there's a large crowd. I keep saying that wants to be there when this market breaks. So, am finding a little bit of selling pressure on some of those deferreds here and there, just because, yeah, they're respecting that we're at some high levels and could break $10 and still be at high levels.
And we have cattle on feed report out this afternoon. Are you kind of expecting that we are going to see those lower placements hold?
I've been expecting that on a lot of reports this last year, pretty much all of them. And USDA's not quite been on the page that I feel like I've been on. So we'll see if they do cut these placements a little bit or not. It's always been kind of a surprise when they're not, and they're a little bit stronger. So yeah, that's what I would look for. Wouldn't expect that this report has to hurt us a little bit, and that 101 on feed. Also, I'm leaning towards a little bit more friendly on that number as well, personally. So we'll see if the USDA throws us a hiccup or not here.
Okay. And we've got feeder cattle futures down today, obviously with the higher corn, but you've got to believe that market can't fall too far. I mean, I was out in the country in the sandhills of Nebraska, and the cash market continues to be on fire there.
Yeah, there you go. I mean, I'm surprised that the futures trade this week. I guess it's been, we know that the numbers that we have in front of us, and producers are, cow-calf producers, well-deserved. They needed this year to try to line their pocketbooks after years of struggle, and their input costs are up too. So it's you're actively selling at some of these high prices and wanting to, catch it while it's here. So that's been the struggle with, are you going to keep your heifers or not? And for me, the guys that are keeping the heifers, I think look at the slaughter cow prices, how high they are, getting $4,000 for a cow, so you're going to want to cut off that top end there too. So the feeder future shouldn't have to fall this far. I think the cash is going to be able to lead them up and out of here. The $2, swiftly down or up, it's getting kind of confusing, but index holding, around the 260 mark. And I think that it should. I think we're going to see some high prices here for the next couple months, because July, August, there's tighter numbers to choose from. So I feel like we should be able to close that gap a little bit here.
Great. Okay. So let's talk about the hogs. We're up this morning. We've recovered off the contract lows from last week. But do you sense we'll see more recovery? Because it feels like cutouts have improved a little, but we're hovering right around that $100 mark.
Yeah, it's hovering is right. You get a little, higher fundamental news, higher cash, higher cutout, and actually we reacted to it a little bit. It was able to kind of rally. The hogs have been tough enough to trade that you get some good fundamental news, and then they head lower. But once the beating was finally done, had a nice long steady downtrend. I'll look at that, and then it picked up the pace to the downside, maybe a little bit of a blow off bottom there, and then just kind of finally turned. And now we've had a nice little rally here, and it's trying to maintain. Now I think we have to try to discover where do we need to start to hold and maybe trade a little bit more sideways, because we've had everything but sideways in this market here. And August at 92, going off a little bit higher, or trying to be higher than what the June and July went off. That does spook me just a little bit. So I'm not thinking that there's just another leg higher from here. It's going to try to consolidate and be a little bit more of a sideways trade here.
And greens are trying to bounce this morning, but is it all technical because we're oversold in a lot of these markets, especially corn after some new lows yesterday? And even if we get a recovery, how much can we build on it, Scott?
Right. Excellent points. Yes, it's a little oversold, getting a little bit of a bounce. Funds have been, severely short these grain markets. But just look at what we've already priced into this market. We've got a big crop coming, and the weather forecast looks favorable. It's not helping this market to rally. We've got, poor demand. We've got the possibility, or I guess the outlook that we're probably going to keep this trade war going with China. So a lot of that's already into this market. And what else can we throw at it to make it more negative for me a little bit? So getting a little bounce off of that, which also means there's not a real bullish story that says, hey, we need to extend this up to, a 20-cent rally or not. So I still think rallies are meant to be sold. And I think a lot of farmers have finally kind of maybe realized where this market is at and what we're sitting on. So there's been, these rallies are a little shorter because there is some selling pressure that's maybe happening now, that maybe some of the more and more of the general public has turned a little bit negative on this crop and realizes that the upside is just going to be a little bit of a struggle here.
Yeah. And I know we got some demand news on beans and meal this week, but it's really not enough to move the meter, is it?
No, not really. And
Yeah.
we would need some China news, and they're sitting on a lot of beans there, and they've bought quite a bit. And so yeah, that demand is still just a little sour for me.
Okay. Thanks for joining us. As always, talk to you next week. Scott Varlick with Varlick. That is Markets Now.